The most convincing breakout on your screen often represents the most dangerous moment to risk capital, because what appears as institutional confirmation to retail traders is frequently the final act of systematic inventory distribution by the composite man. This cruel irony forms the foundation of market manipulation that Richard Wyckoff decoded decades before algorithmic trading amplified its devastating effectiveness. Where conventional education teaches traders to interpret penetration of obvious levels as trend confirmation, Wyckoff revealed these dramatic thrusts as expeditions for liquidity, engineered specifically to trigger stops, invite late entries, and provide professional interests the other side of the trade at premium prices. The psychological architecture of this deception operates with mathematical precision. Traders spend weeks watching a stock consolidate near well-defined resistance, building conviction as the range tightens, interpreting every approach as preparation for the inevitable breakthrough. The trading industry has constructed entire methodologies around this fundamental misconception.
This is the critical information.
Teaching generations of participants to chase
I'll deliver
these
this to the
moments
director
of apparent
immediately.
certainty. When price finally penetrates the watched level, accompanied by expanding volume and bullish social proof surging across screens, every instinct screams confirmation. The breakout appears to validate patience, reward analysis, and provide the trending opportunity that justifies risk. Yet this moment of maximum conviction often marks maximum danger. The very enthusiasm that creates buying pressure provides the liquidity necessary for smart money to complete distribution without disturbing price equilibrium.
If we implement the changes
Wyckoff
now,
understood that
we
retail
project a
conditioning
20%
equates dramatic
growth.
movement with institutional commitment, allowing the composite man to rehearse strength while selling into manufactured belief, leaving
This article
footprints in the form
confirms
of volume
The
signatures
Regulatory
and
Commission is
structural
opening a full
context that
investigation
contradict
starting
the headline
Monday.
price
That's
action.
impossible.
The truth
We paid
Wyckoff
them off
taught
weeks
remains
ago.
both disarmingly simple and unforgiving. Genuine movement is financed before it is advertised, and advertising without adequate financing represents an elaborate trap. When authentic sponsorship drives price action, effort and result align harmoniously. Cause precedes effect, volume supports spread, and pullbacks find logical support at danger points. When sponsorship is absent, price can be made to leap dramatically, but it cannot be made to stand. The tape appears emphatic.
Your
The
transaction
candle
is complete,
closes
thank you.
decisively above
How
resistance.
may I help you, sir?
Yet the
Good
very
morning.
violence that feels
I
like
need to
safety
access my
reveals
safety
that demand
deposit
is
box.
being borrowed from the future rather than built systematically in the present. Consider how this manipulation exploits predictable human psychology. The amateur sees a stock breaking above resistance and assumes smart money is buying, interpreting any upward price movement as bullish confirmation, regardless of the underlying energy required to achieve that movement. The professional observes the same breakout and immediately measures the relationship between effort expended and result achieved, often discovering that increasing participation produces diminishing sustainable progress. Where the amateur celebrates apparent momentum, the experienced practitioner recognizes absorption patterns masquerading as accumulation, distribution, disguised as institutional commitment. This fundamental misreading transforms traders from market participants into unwitting inventory recipients, accepting positions precisely when smart money requires liquidity for exit rather than entry. The composite man understands that obvious levels function as reservoirs of resting orders, and that retail education creates predictable behavioral responses that can be systematically exploited. The resulting transfer mechanism operates so smoothly that victims often interpret their losses as bad timing rather than systematic manipulation. Mastery begins by replacing the reflex to chase apparent strength with the discipline to read underlying market structure. By demanding evidence that adequate preparation exists before accepting breakout validity, and by recognizing 5 specific pre-breakout signatures that Wyckoff used to separate genuine institutional commitment from staged theater. This transformation moves you from reactive participant to proactive market reader, from someone who responds to price advertisements to someone who audits the financing behind those advertisements. The promise here is precision of the kind that converts uncertainty into conditional clarity, that transforms trading from emotional speculation into systematic analysis of supply and demand dynamics revealed through volume, relationships, and structural context. This approach liberates you from the cycle of hope and despair that characterizes breakout chasing offering not merely protection from obvious traps, but profound understanding of the forces truly driving sustainable price movement. If this reframing of conventional breakout wisdom makes immediate sense,
this is the critical information right
comment
here.
the word
Understood.
discipline
I'll
below
deliver
as
this
a
to the
private
director
contract
immediately.
with yourself, because the edge revealed ahead demands not speed, but the calm refusal to buy the advertisement without first auditing the financing that supports it. Wyckoff did not ask the market to be reasonable. He observed that it operated under immutable laws as precise as those governing the physical universe, and he submitted to them with the discipline of a scientist studying natural phenomena. These principles transform the apparent randomness of failed breakouts into predictable patterns of institutional manipulation, revealing the hidden mechanics that most traders experience as inexplicable market cruelty, yet which operate with mathematical consistency across all time frames and instruments. The law of effort versus result governs every market transaction with unforgiving precision.
The Regulatory Commission is opening a full investigation starting Monday.
The raw energy expended by market participants.
We paid them off weeks ago.
The cumulative force of buying and selling pressure applied to move price. Result appears through the price movement achieved, the distance traveled, the sustainability demonstrated, and most critically, the ability to hold ground without immediate deterioration. When genuine institutional money commits capital to a direction, these elements align harmoniously. Expanding volume produces substantial, sustainable price movement that maintains momentum over time, creating the smooth, powerful trends that characterize authentic markup or markdown phases.
Thank you.
However,
how may I help
when effort and result diverge significantly,
I need to access
when
my
massive
safety
energy
deposit
produces
box.
minimal, sustainable progress, the composite man reveals his manipulation. Consider the approach to well-watched resistance where retail traders await the decisive breakout. Bars lengthen, headlines multiply, transactions swell, yet the closes retreat from the highs and the net advance for each unit of effort diminishes. The public sees participation and interprets confidence. The law reveals friction. In physics, increased power with decreased motion implies opposing force. In markets, expanded volume with contracting upward spread implies hidden supply, distribution asserting itself while appearing to endorse the move. The law of cause and effect provides the second fundamental constraint, governing the relationship between horizontal preparation and vertical movement. Like a spring that must be compressed to store energy, significant price movements require adequate preparation phases where smart money quietly gathers or disperses large positions. Wyckoff's point and figure counting formalizes this principle, translating the width and character of horizontal ranges into realistic price objectives. A shallow, frantic consolidation cannot finance the campaign that breakout advertisements promise. It may print a dramatic bar, but it represents a withdrawal against an empty account, lacking the reserves to defend new territory.
They know we're here. We have to get out of the city.
Once initial enthusiasm exhausts, understanding these laws transforms trading from emotional speculation into systematic analysis of supply and demand dynamics. The trader who grants supremacy to these principles inspects the ledger of effort versus result, verifies whether credible cause exists, and accepts that movements which cannot be financed by preparation will not be sustained by enthusiasm. Regardless of how convincing the initial thrust appears, the immutable laws governing market physics manifest through three observable phenomena that reveal manipulation before it completes its destructive work. Wyckoff's genius transformed abstract principles into concrete detection methodology, providing unmistakable signatures that distinguish genuine institutional commitment from elaborate deception, designed to harvest retail enthusiasm at precisely the moments when breakout probability appears most convincing.
This is the critical information
signature
right
announces
here.
itself
Understood.
through the fundamental
I'll deliver this to the
contradiction
director
between
immediately.
visual drama and actual sponsorship. When price slips through watched levels on thinner or fading volume, the movement resembles a boat gliding with favorable wind rather than an engine driving against resistance. Genuine campaigns absorb overhead supply with visible institutional participation, expanding volume as large interests commit capital to clear the path ahead. Manufactured breaks demonstrate the opposite pattern, floating rather than driving through critical levels.
The figures on this board
Borrowing
clearly
demand from
demonstrate
emotional
the trend.
traders, while
If we
advertising
implement the
strength
changes
without
now,
paying for it in
we
committed
project a
volume.
20%
This
growth.
effort-result divergence exposes artificial momentum creation, where the composite man engineers visual penetration, while systematically withdrawing
This
the
article
very
confirms
support
it.
that retail
The
participants
Regulatory Commission
assume
is
is
opening a
driving
full
the move.
investigation
The
starting
second
Monday.
indication
That's impossible.
manifests in the
We
immediate
paid them off
aftermath.
weeks ago.
when true intent can no longer hide behind initial theatrics. Authentic breakouts maintain momentum and demonstrate sustained follow-through, accepting tests with structural integrity that absorbs residual pressure without compromise. Manufactured brakes gasp on contact with open space, the subsequent bars overlapping and closes, slipping back into prior ranges, creating tails that lengthen as if pulled by gravity. This rapid deterioration represents not random volatility, but inventory quietly transferred to late participants who mistake geometric penetration for institutional validation, leaving a vacuum where genuine sponsorship should provide defensive support. The third signature betrays itself during the approach phase through adverse effort-result relationships that reveal hidden professional activity. As price nears significant thresholds, volume swells, while spread narrows and closes, migrate toward bar midpoints, the tape churning with agitation rather than advancing with purpose. This pattern exposes supply overwhelming demand despite apparent participation, as professionals use excitement generated by expanding volume to distribute inventory into manufactured enthusiasm. Heavy effort accomplishes minimal sustainable progress because the energy is being absorbed by waiting supply rather than propelling price through vacant territory, leaving the precise footprint. Wyckoff urged traders to respect when appearances insist on strength, yet the ledger records conceal distribution. The final two signatures in Wyckoff's detection methodology operate as architectural inspections, examining whether breakout attempts emerge from solid structural foundations or represent premature constructions destined for collapse under their own ambition. These elements complete the framework by revealing not merely what the market appears to be doing, but when and how it should be doing it. If genuine institutional sponsorship drives the campaign, authentic breakouts possess a birthplace that Wyckoff located with anatomical precision within
we have
phase
to get
C,
out of the city.
where the final test resolves the fundamental question of who controls the trading range. Accumulation that has matured sufficiently for markup presents either a spring that shakes out weak hands and clears remaining supply, or a decisive test that returns price above support with unmistakable authority, demonstrating that demand has overwhelmed all available selling pressure. Distribution that has ripened for markdown presents the reciprocal pattern, the upthrust after distribution that reaches above resistance to trap late buyers before slipping back under, revealing that supply has absorbed all available buying enthusiasm. The critical observation that separates professional analysis from amateur pattern recognition lies in understanding that most failed breakouts launch prematurely from Phase B, the arena of probing, volatility, and inventory exchange, where large interests remain actively negotiating with the market rather than committing to directional campaigns.
I'll deliver this to the director immediately.
Born during Phase B testing lacks completed absorption, and therefore lacks the structural durability necessary for sustained progress. Such attempts can dazzle for a bar or two, creating the visual drama that triggers retail participation. Yet the foundation beneath them has not been engineered to carry the weight of a genuine trend. Phase location analysis frames this fourth sign with unforgiving precision. If the attempted breakout originates amid Phase B turbulence, rather than from a Phase C resolution, probabilities heavily favor a liquidity raid designed to harvest stops and attract late entries, not an institutional campaign prepared to defend new territory. The tape may appear energetic during these premature thrusts. Volume may expand dramatically.
Confirms it.
Yet
the Regulatory Commission is opening a full investigation starting Monday.
Remains in testing mode rather than commitment mode, still exploring supply and demand dynamics rather than executing a prepared advance. The fifth signature manifests through the conspicuous absence of proper testing sequences that provide the conservative preparation opportunities professional traders patiently await before committing significant capital. In healthy markup phases, authentic institutional sponsorship creates specific patterns. A sign of strength followed by a last point of support, often manifesting as the classic back up to the edge of the creek, where price revisits the breakout zone on contracting volume and narrow spreads, then pivots upward from a higher low with renewed institutional support. This testing phase allows smart money to verify structural integrity, while offering informed participants low-risk entry opportunities, where potential reward vastly exceeds defined risk. In healthy markdown sequences, the reciprocal pattern emerges through signs of weakness, followed by last points of supply, where rallies fail beneath broken support levels, sometimes described as throwbacks that reveal persistent overhead supply waiting to absorb any recovery attempts. These testing sequences serve dual purposes. They confirm that the breakout direction maintains institutional backing, and they provide multiple conservative entry opportunities for those who understand market structure rather than chasing geometric penetration. False breakouts systematically avoid these preparatory sequences because they cannot withstand the scrutiny that proper testing would reveal. They either refuse pullbacks altogether, sprinting away from breakout levels because no genuine sponsorship exists to defend a retest, or they produce sloppy, high-volume retreats that slice back through the levels they supposedly conquered, exposing the absence of institutional commitment that retail participants assumed was driving the initial thrust. When apparent breakouts occur without offering these measured, low-risk participation opportunities, when price leaps without providing conservative entry points,
we have to get out of the city.
Movement indicates manipulation rather than authentic campaign development. The absence or corruption of proper testing sequences represents the composite man's fingerprint on manufactured moves, because professional interests understand that sustainable trends provide multiple intelligent entry opportunities, while traps offer only single moments of apparent certainty, designed to capture maximum retail participation at maximum risk. Without these testing phases, risk becomes undefined. Reward represents borrowed time rather than structural potential, and the breakout transforms from investment opportunity into elaborate advertisement that no informed professional would underwrite with committed capital. The market's most reliable accomplice is not volatility or complexity, but hope itself. And hope becomes most dangerous when it borrows the language of discipline and masquerades as systematic analysis.
Understood.
Traders
I'll deliver this to the director
Wyckoff's
immediately.
laws with academic precision still abandon them at the sight of a dramatic candle penetrating watched levels, because the psychological need for redemption transforms objective evidence into subjective narrative. This corruption of analysis represents the composite man's greatest weapon, more powerful than superior capital or privileged information, because it exploits predictable emotional patterns that render even informed participants vulnerable to manipulation at precisely the moments when disciplined.
The figures on this
Adherence
board
to
clearly
structural
demonstrate the
principles
trend.
matters most. The
If we
hopeful
implement
trader
the
emerges
changes
as the
now,
primary
we
target for
project a
manufactured
20%
breakouts,
growth.
carrying recent losses like invisible debt that distorts every market observation. This archetypal figure, whom we might recognize as
This
the
article
hopeful hero,
confirms it. The Regulatory
enters each
Commission
trading
is opening a
session with
full
the desperate
investigation
need for the
starting
next
Monday.
breakout
That's
to be
impossible.
the one that erases
We paid them
history
off
and
weeks
validates
ago.
patience. He notices fading volume during the approach to resistance, but reframes it as smart money accumulating quietly, watches mid-range closes and explains them as healthy digestion before acceleration, and converts each adverse effort-result relationship into a narrative about imminent institutional commitment. Hope edits the tape until the tape appears to agree with desire, creating a feedback loop where declining evidence paradoxically increases conviction. The very urgency created by
transaction is
previous
complete,
losses
thank you.
bypasses proper
How may I
signal
help you, sir?
verification,
Good morning.
transforming conservative
to access my
methodology
safety
into
deposit
wishful
box.
thinking that sees institutional sponsorship where only inventory transfer exists. Alongside this figure stands the confirmation collector, trained by years of educational content and social proof to equate lateness with safety, popularity with institutional backing. This trader waits patiently for the all-clear signal, the decisive close above the watched line, then buys the advertisement precisely when risk-reward ratios have inverted catastrophically. He studies volume expansion but ignores its consequence, welcomes increased participation without measuring sustainable spread, and feels safest exactly when entering at danger points rather than proper testing zones. The very penetration that attracts him represents the liquidity event that professional money engineered to harvest stops and attract late entries. Yet his conditioning interprets obvious, public signals as confirmation rather than manipulation. Fear of missing out operates with gravitational force, creating artificial urgency that compels participation at precisely the wrong moments, overriding weeks of patient analysis in favor of immediate emotional response to apparent momentum. The line trader completes this trio of systematic failure, drawing immaculate geometry across chaotic price action, and believing that lines impose causality upon market forces. This archetype mistakes
They know we're
touch
here.
for truth,
We have to get out of the city.
penetration
The
for
bridge is
institutional
blocked.
commitment,
There's nowhere to go.
and visual structure for fundamental scaffolding. never questioning whether the supposed breakout was financed by adequate cause or merely propelled by borrowed enthusiasm from late participants. He sees a horizontal line on his screen and imbues it with magical significance, assuming that price crossing it automatically triggers sustainable trends, blind to the supply and demand dynamics that Wyckoff emphasized as the true drivers of sustainable movement. When the market provides dramatic thrust through such geometric levels, the line trader interprets it as undeniable validation, completely missing the underlying weakness that smart money has carefully engineered through the very manipulation he mistakes for strength. These psychological archetypes represent not random individual failures, but systematic vulnerabilities that the composite man exploits with patient indifference and mathematical
This is
precision.
the critical information.
Confirmation
right
bias leads
Understood.
traders
I'll
to
deliver this
cherry-pick
to the
evidence
director
that
immediately.
supports desired outcomes, while dismissing contradictory signals as temporary noise or algorithmic interference. Recency bias transforms yesterday's trend into tomorrow's certainty, creating false pattern recognition that ignores structural context. Loss aversion refuses dignified exits and converts danger points into altars of denial, where hope substitutes for risk management and prayer replaces analysis. The market's psychological pressure transforms clear-thinking analysts
on this board
into
clearly
reactive
demonstrate the
decision-makers
trend.
who
If we
rationalize away
implement
the
the
very
changes
signals
now,
they intellectually
we project a
understand,
20%
explaining
growth.
why technical knowledge alone proves insufficient for consistent profitability. The composite man relies systematically on traders ignoring effort-result divergences,
This article confirms
overlooking
the
insufficient
Regulatory
cause,
Commission is opening a full
dismissing the absence
investigation
of proper
starting Monday.
testing
That's
sequences,
impossible.
and chasing
We paid them off
geometric
weeks ago.
penetration without verifying structural integrity. He understands that retail conditioning creates predictable, behavioral responses that can be exploited through manufactured enthusiasm, that obvious levels function as reservoirs of resting orders, and that educational content has trained generations of participants to interpret dramatic movement as institutional validation regardless of underlying financing. This exploitation operates so smoothly that victims often interpret their losses as bad timing or market manipulation, rather than systematic psychological
Your transaction
vulnerability.
is complete, thank
The
you.
antidote to this
How may I help
psychological
you, sir?
manipulation
morning.
requires recognizing that
I need to
emotional
access my
discipline
safety
represents
deposit
not
box.
merely a virtue but a strategic imperative, equal in importance to technical knowledge. Markets reward those who subordinate emotion to evidence, who trust the relationship between effort and result more than immediate impulses, who demand completed structural preparation before accepting breakout validity. The trader who grants supremacy to Wyckoff's laws inspects volume signatures with clinical detachment, measures cause and effect relationships without emotional investment, and treats every apparent breakout as guilty, until proven innocent, through proper testing sequences and sustained institutional support. This moral framework positions logic as the only ally that does not negotiate under pressure, discipline as compassion for future capital, and patience as wisdom rather than missed opportunity. Hope, when untethered from structural foundation, transforms from virtue into liability, from strategy into inventory, waiting for a professional counterparty. The cure lies not in aggression or faster decision-making, but in reverence for evidence, in the humble recognition that markets exact immediate penalties for emotional speculation, while rewarding systematic analysis of supply and demand dynamics revealed through volume relationships and structural context that cannot be manipulated by enthusiasm or rationalized by desire.